With the first quarter earnings call imminent, ARK Invest CEO and founder Cathie Wood predicted that Tesla stock would explode this week. Tesla investors and fans are excited about the reports, and experts like Wood are bullish on Tesla stock, suggesting that it may soon see an upward climb. Cathie Wood predicts Tesla stock will surge next week, but why? Where are the studies and findings that support her arguments? Watch to see if all 6 ARK ETFs outperform the S&P 500's 16% increase in 2020 with returns of more than 100%. Wood became well known for his investment acumen. 6 separate funds completely destroyed market returns, proving Wood's point that new ideas are the key to rapid expansion. Wood's investing approach centers on putting money into innovations that will have a significant impact. Wood identifies AI, DNA sequencing, robots, energy storage, and blockchain technology as top priority areas. There are 5 infrastructures that will significantly contribute to the development and evolution of the international economy. Tesla certainly fits the bill. It's important noting that Wood has a 5-year investment horizon since, in her experience, this is the optimal time frame for capitalizing on disruptive innovations. In less than 5 years, the value of these stocks might skyrocket. Wood is a fan of Tesla, an electric vehicle manufacturer. She estimated that the price will rise to over $3,000 in 2024, having peaked at around $1,200 in November 2021. The current price of a Tesla is in the thousands. Following the launch of the Giga Berlin production facility, Tesla's stock quickly recovered, and the company's market cap once again surpassed $1 trillion. Wood, an outspoken proponent of Tesla's potential, has predicted that the company's share price will hit $3,000 by 2025. She claims that Tesla stock will explode this week, but why? There has been a deluge of positive triggers, and it's easy to see why when you consider recent Tesla activity in the headlines. For one, Tesla will be able to greatly increase production in Europe with the opening of the Gigafactory in Germany, while concurrently reducing the prices of importing cars from its factory in Shanghai. Later this month, Tesla's Gigafactory in Texas will begin sending out vehicles for delivery. All Tesla autos marketed in the United States are manufactured at the company's Fremont factory in California, which has the potential to build 500,000 electric vehicles annually. Even though it will be a while until Gigafactory Texas is completely operating, its output is estimated to increase by more than 3 times. Finally, when the market closes on the 20th of this month, Tesla is anticipated to announce its quarterly earnings for the fiscal year ending in March 2022. After hearing rumors of increased delivery and profits, investors are keen to see the actual numbers. Although the most recent results call did little to boost the stock price, investors and analysts had expected the stock to skyrocket following the incredible news of the fourth quarter of 2021. Investors started dumping stocks because they expected a rate hike from the Federal Reserve, which they believed would further depress the value of the market. To be honest, it's been a rough year so far for all equities, especially growth stocks, and most projections were unstable at best. What are the odds, then, that Wood will be right? When consumers realize how well Tesla does despite supply challenges, we think the market's mood will change for the better. Sales of competing brands have dropped by double digits due to supply problems rather than low demand, according to surveys, further highlighting Tesla's supremacy. Some think this was due to Tesla's adoption of investable innovation, a fundamental trait Wood emphasized in the past. There are 2 main components to Wood's method. The first is that not all breakthroughs have to do with breaking new ground. According to Wood, investable innovation cuts costs, works across sectors and regions, and encourages even more creative thinking. What's that you say? Second, there needs to be both broad and comprehensive research into the future in order to determine the best investments. Tesla's promises are borne out by the numbers. In the second quarter of 2021, Tesla reached a new sales record of roughly $12 billion, more than double what it had done a year before. There has been consistent growth since the second quarter, when net income of $1.1 billion was 10 times more than in the same period the year before. Experts are split on the company's valuation. Some feel it's too pricey due to its high P/E ratio, while others point to optimistic earnings growth projections. Investment firm Jefferies found that Tesla was successful in passing on rising costs for raw materials to consumers by increasing vehicle pricing while keeping sales and market share stable. The revenue numbers that will be announced on April 20th are anticipated to have an effect on Tesla's stock price. However, despite a shutdown at its Shanghai facility, difficulties in the supply chain and increasing material costs must be taken into account. In the first quarter of 2020, deliveries increased marginally to 310,000 units. This means that, independent of any near-term triggers, investors' reactions to Tesla's results will be interesting to watch. Cathie would want to stick around for the long haul. When asked why she had such high hopes for Tesla's future, she gave the following reasons. Wood mentioned some of the benefits of electric vehicles and the recent decrease in the cost of battery pack systems. Reduced petrol costs is one example. When converted to dollars, $0.10/ko is the same as paying less than $1/gallon for gas. The low maintenance, increased efficiency, and other benefits of electric motors. Because of these premises, Tesla's popularity will grow as global concern about climate change increases. She anticipates the average price of an electric vehicle will fall below that of a gas-powered vehicle in the next year or two. By 2025, the average price of an electric vehicle is expected to drop to $18,000 from $25,000 to $26,000 for a conventional fuel vehicle. What should investors make of the most recent predictions for Tesla stock in 2022? 30 analysts polled by MarketBeat put the average price target for Tesla stock at $935.47 a share, with estimates ranging from $250 to $1,580. Analysts' opinions on the stock's fair value, based on fundamentals versus appeal, are extremely split. With regard to investors, there were 15 buy ratings, 7 hold ratings, and 8 sell reviews, with the latter being the most popular opinion. On March 18th, Morgan Stanley analysts reiterated their buy recommendation and provided a 2022 price target of $1,300 for Tesla stock. On February 14th, U.S. investment company Piper Sandler upgraded its rating from neutral to overweight and raised its price target from $1,300 to $1,350. All of these projections are largely reliant on Tesla's future performance and are therefore vulnerable to change. Later this year, according to a number of experts, the sequential growth is expected to quicken even further. The company's German factory has started producing goods as of the second half of 2022. Vehicle production at Tesla's planned Texas factory may begin in as little as a few months. The second quarter has gotten off to a rough start, and it could get even worse before it gets better. For example, Tesla's manufacturing in China has been placed on hold owing to COVID-19 requirements. It also requires some time for new plants to reach full production capacity. This means that the second quarter will see limited effects from Tesla's Berlin manufacturing. As with many other ODMs, Tesla has had a rough year, leading some to speculate that this will have a direct effect on profitability. Tesla's goal is to raise vehicle deliveries by 50% despite these challenges. Tesla's delivery statistics by 2022, according to Gene Munster, managing partner at Loop Ventures, are excellent considering the hurdles, and we think Tesla, he observed, would continue to outpace other manufacturers in terms of sales growth. When it comes to electric vehicles, Tesla is still the most well-known brand. The electric vehicle market is now dominated by Tesla. With a 15% market share each, Volkswagen and General Motors tied for second. In terms of what is to come, full self-driving technology is still in the works. Musk has reiterated his certainty in his 2022 prediction, stating that he will be shocked if Tesla does not achieve full self-driving before the end of the year. Given the promise of fully autonomous driving technology being delivered in 2022 on the heels of a positive earnings call report, we think that Wood might be right. It's possible that Tesla's stock price may spike next week. Can we expect the stock price to stay at these levels for the foreseeable future? That is yet to be determined. Could you say that you concur with Cathie Wood? When the results call comes around, how much do you think the company will have made? Leave a comment below.